Good. So before the starting, let me again introduce to you our distinguished speakers. And we have Ali Soliman with us. Thanks to be with us. Ali is an experienced actuary. He holds a fellowship from the Institute of Faculty of Actuaries in the UK. He has more than 20 years of experience in insurance companies and all business function, asset and liability modeling, digital assets, and he had various senior managerial positions in top UK financial institutions, including Aviva Group and Legal and General. He's currently one of the leads on policy initiatives in the Bank of England. He works at Bank of England, where he focuses on enhancing the insurance risk framework and evaluating regulatory risks. Additionally, Mohamed is the chair of the Arab Actuarial Society and also the chairman of the Bishkek and Fintech Working Party at the Institute and Faculty of Actuaries. You see that Ali is completely in the middle of the topics we'll be handling today. Thanks again, Ali, for joining us. Let's continue with Ali. We see that digitalization is profoundly changing our industry. Would you share, Ali, please, your insights on how adopting the digitalization, digital practices could reduce the operational costs of companies or improve their distribution reach?
Thanks, thanks, Mark, and also thanks to my esteemed colleague and Cook for laying the ground for this discussion. So you currently mentioned at the start, I'm a qualified actuary, and one of the jobs for an actuary is to observe trends. And one trend I also observed for the last few years, whenever there's an actuary in a room when presenting a speech, those all empty. Because the deeper that I'll think that we're going to get like core speech, full numbers, full tables, full graphs, which is true. We say all mathematics are not sure about the house, but we are. But I think for the sake of today, and the while of the conference, I decided to break that taboo, and actually decided not to mention anything in number. And I decided to annotate the story, Anika's story about, virtualization and technology that houses that they applied or potentially applied in the trust industry. And my goal is that the audience can hear with very wild 2 points, that are going to see in the minds that when they leave and many years on in the news, they can refer to what I mentioned. Okay, so to kick off for months, cognitional digitalization, and also on your question, referring to how much validation can impact operational cost. Let's lay down some foundation, and I think the most important point is that we have to acknowledge that the insurance industry is very slow to adapt to change. It's we moving in a, like we call it, the turtle speed. No quickly, and there is no exception. For some reason that we can discuss, offline or late. Okay, so the first point is that we have to avoid referring to the visualization or transformation or advanced technology as a ground break or a new revelation. No, it's simply an upgrade of something that existed in the past and has developed. The best example of this, for example, everyone nowadays talking about like a blockchain as a new revelation in the industry. I don't know how many people know that the blockchain actually goes back to the 70s or 60s, was used by the CIA, and the technology, became adaptable, and we found something that we can use the blockchain for. Same thing was happened to the cryptocurrencies for example. People think that it came down when Satoshi published his paper in 2009 or so. No, actually the concept about like cryptocurrencies goes back to 1989. The only thing that prevented it from happening is that the technology, which is by smart home, didn't exist to transfer the theory to practice. So it's very important that we know that this is like a gradual upgrade. Okay, so this is very important because this will give us a good foundation to define all the complexity and mystery things about technology, and will allow us to build something like what I call it a vision and a mission of how we can adapt or apply digitalization in the insurance industry. And for the sake of our presentation today, I'm just going to give some building blocks of how this can happen and how to adapt this. Okay, so it took about like the key aspects of technologies that can be used to apply to the insurance industry. One thing we have to be clear about, a part of any good story I would like to give you, is that you have to differentiate between adopting technology in the insurance technical process compared to adopting technology and transformation in the insurance operation. These two are different stories. It's like metaphorically, it's two different beasts that can be slayed or will be slayed in a different ways. So you have to make sure where the station and where they get the perception. Okay, as an example, the insurance technical process that refers to all the stuff that my people, i.e. actuaries, can do regarding modeling and pricing and reserving and capital modeling and all this, and they can use new technology, have to put it in there in service of Excel, use with the Python. It would accelerate the process, save your time, save your costs, and eventually use a profit for insurance company. So, but this is a part about like an insurance technical process. Okay, on the list you have got insurance operation. Like if you take, for example, underwriting, and a simple example we can handle this is big problem underwriting process, speaking for personal line, is that you need to protect the fraudulent claim, either at the end or at the start. Now, for example, it's something called digital identity, which is based on centralized or decentralized, blockchain. Having these sort of like digital identities will accelerate first the underwriting process, either at the start or at the end, and avoid a lot of fraudulent claim. So here's my point about differentiate between these two pieces. So exactly want to apply here, I want to apply that. Okay. And also for me, I think there's something that I couldn't mention that touched upon regarding the insurance operation and the telematics. Okay. Jag touched on this in the on my speech. For telematics, you watch the black box, you plug it into your car, and it gives you all the reading. And again, this is about the insurance operation. Instead of doing the price we're gonna single points inside, now we can look continuously and monitoring your risk on a daily basis or even on instantaneously. So you can imagine if you can manage the risk, how much losses that can save you at the end. Okay. Now if we move to I'm going to talk about 3 key examples of the technology that's used in the industry. And the first one, there is one very close to my mouth, could have been working at for 2 years now, which is the blockchain. Again, as I mentioned in the start, the blockchain is not something new. It's nothing in your relation, nothing new at all. All about it, it's just simply it's a way to record, manage, and process data. It has a bit of an advantage, again, this case of like a non-conventional sort of database, which I'm going to mention later. Besides, applying the blockchain technologies, which is very, very controversial in insurance industry, in the industry, can be done in 2 different ways. So it can be done either like directly, or it can be done indirectly. So it can be done directly, whereby the truth again say, okay, I'm going to write all my underwriting database on blockchain ledgers to accelerate process and also make it easy. One important point you have to acknowledge here is that yes, eventually a middle of the day will use the blockchain or any sort of data processing you're using in the database. But the key differentiator, because you have some research is by the way, but the key differentiator it says the functionality and advantage of the blockchain, which will give you immutability. I.e., I don't have to validate the database because the nature piece is already validated. So again, this is time, but I know that if I get validated about ledger, it's done, but and I now spend time validating the year result, the money about this. That's something that we have to keep in mind. So that's an example if you were to apply the blockchain directly into insurance process. Now, the second item, if you were to apply the blockchain indirectly into the insurance process. And again, the basic concept of this case, using the vision theory based on identity for example, for medical insurance. So currently, medical insurance is one of the big part that I've also known insurance big party team like product claim. But insurance, some people actually trying to claim from tip insurance companies, and it's rate amount claims. Having that ledger, will validate that claim for you and save you a lot of potential loss that you could pay. So, again, directly or indirectly. Now, the second example, that again for digital transformation, again one of my favorite is a smart contracts. And smart contracts is not the digital signature that you do for insurance contracts now. It's smart contract. It's a product that is built on a blockchain. I also simplify the picture for you. So there's something called DLT, which is distributed ledger technologies, and then an example of DLT is blockchain, and then on the blockchain in those smart contracts. This picture is very follow because some people actually until now they think that anything they think that when you mention blockchain is specific Bitcoin, or if you mention Bitcoin it's cryptocurrencies. Well, just do it. Don't feel them like so to good that had this appreciation. So as mentioned to you, smart contract is an algorithm that is built on or executed on the blockchain. And what its key advantage is since we can optimize that some client to I'll say nشrح between the insurance company and what's called an unlifers. You know what was what you call it as selection? That is selection or a customer make really clear, or even sometimes also the service fund actually would like to buy a position, but I would show you that you something in the video back again. This country is a lot, especially at the Middle East and of course back in the BJ funds or mirror. The good thing on smart contract is that the execution of that trigger, the payment full, the is to the boss is all automated. There is no bureau intervention. So you set the products to the lowest order, you say you don't want another insurance that they may making subjective, adjustments about you click. It's all about the condition. If the condition is applied, the money gonna go to your accounts, slip away. One of the best example of these was actually that that's a Google, not actually Shiekh, that's a Google, and the smart contract will probably show us. They are totally on the worksheet whereby they connected all data from the populations and the airports and the airlines to know that it is any delay or cancellation. These three sources or different sources, the validity, yes, never it comes on the screen, yes, but that be cancelled all the day, but I don't have validity because all sources validated for me. Straight away, the money and I goes to the customer or the boss sold that in a matter of like minutes, not even 3 seconds. So that was one of the examples for the smart contracts. And then, so the last example I've swapped out is the big data bit source. And that's the big deal in the industry. As you know, our power industry is based on data. And mark my words, whether we talk about insurance industry, banking, whatever industry you can pick, who owns data, owns the future. End of. It's very, very important. So, for us, data come to all of us. The automation and coordination about like the Malex, emerging like I Zurich or Berlin houses civil my sense. We got a concept about like insurance, what about like pooling risk. You put a lot of risk and then you take the average for the claim payments also. So now to demand insurance and allow you actually to handpick and price for each individual customer based on the pricing behavior. Some smart people as well actually understood the concept and realized, hold on a second, if I can do promotional pricing based on behavior, why can I do it from very good shorts? So nowadays the wearable, the approach and the wearable you have in your hand, they can measure your cut rate, actually can tell whether they go to jail or not, how many steps, how many miles they've done either walking or running and so on. And instead, if Ali on this number of steps per day or this number of running per day, if they help your life, can be eligible to receive NAS counted on the premium. So again, once you understand the bottom line concepts of how the design can work, this is how we have applied. A good thing actually that was applied and very, very important for the designs of big data. Something which also is all about assessing risk and reserving for risk. This outro, as simple as that. Okay. Some finally get a situation for some new life business that is alien to us, that we cannot assess property, and if you can't see property, can always reserve for it. One of the best example is Sharm insurance. It's a newcomer. I know that is like a single calculate time one rate down about the rates because there's no much claims on so that no one knows what's gonna happen in the future. But the good thing about like data science and machine learning that you can implement to reduce your risk and reduce the cost is that models can actually predict for you, can give you key house on potential risk and scenarios or stability shows how can be developed in the future. Not only that, we come to reserving, as you know, reserving is what like the historic data key. So I don't have historic data key. So what I can do, again, using something called supervised and unsupervised machine learning algorithms, it can produce for us synthetic set of data. The machine can tell us, actually, you don't have historic data, but if you were, it will get up like this. You know, one this example, by the way, about scenarios. You know, a few months ago with the clash of Microsoft, with all the global GRIs or technologists, and I spoke to some people in the industry, and they said, yeah, because we didn't pay much claims. But they didn't do the story. They didn't pay much claims because that instance was not part of the coverage. It's as simple as that. So by the way, it is using these sort of scenarios generated by walls, it can help you. Even yes, they got lucky by chance. But there is a difference between excluding this event by chance compared to I'm executing this event because the model informed me a certain scenario was happening, so I'm gonna execute it on my term for my job application. So this is all step that I gave about today's slide machine learning. Okay. The other two aspects just to don't take much. The sign is about the water distribution for the insurance and how actually technology handles that. Okay. What they think the insurance industry and actually most of the leaders talk about is the micro insurance and financial inclusion. We need to should be put our micro insurance about there'll be some sort of a policy for farmers or work people or individuals. It's not about that. It's about the reach, how we reach the population. And one of the examples that was done was actually in Africa, where actually they utilized technology to reach out to farmers in the remote areas of Africa to offer them, insurance coverage, and also allow them actually to buy and sell and settle the initial topic of the crops they farming. So that's one of the examples. So I don't know what's happening, unfortunately, I'm away from the future market, but I don't know just to differentiate between just a bit of just have some contract to low-income population or people independent in the remote area. Also, it's all about the policy. It's on how you're going to reach this population using the new technology. The mobile app's whole development allows so that blockchain can allow for the mutual insurance as well. So it's a matter of a go for that today because it's a topic on its own, but it's very old to highlight. And the last thing to talk about in the field of the gross vision theory is about the rest is our cost. It's nothing cost free, unfortunately, and it's got a huge cost when it comes to implementing and integrating technology inside the insurance industry. So one thing have to change heart, change mind, and perception of people in the industry and the regulation as well for that. Second, it costs money, time, and resources, to buy this technology, to plug it into the company, insurance companies, and the market, and also to maintain it. And sometimes we have this expertise, and sometimes we're not. But one thing I've actually say all the time whenever I give a speech or a presentation about this is that the insurance industry in the Middle East has been lagging and has been behind, the lower treatments for ages, depending on the structure. I.e., for example, the products offering all of this. We know, yes, it's a fact we have to acknowledge that in the Middle East that was the case. But when it comes to technology, there is no excuse because the science is open to everyone. So actually, I would be surprised that any other several countries became more advanced in technology in insurance finance compared to a first world country. I know if I can we have 3-4 minutes because allow me just something very important to you about the adoption of the technology, and I'm gonna do a quick comparison between the adoption of technology in finance and banking compared to the whole chain compared to the insurance industry. So this take the big all the time is that the financial sector is just the one coin two-sided. So one side of the coin is banking, payment, and finance, and the other side of the coin is insurance companies. And for some reason, I don't know why, whenever it comes to insurance companies and reinsurance companies, we don't talk about payments, the settlement, the payment between the policy model to the insurance companies and paper between the insurance company and the reinsurance, the both-way traffic. The reason I mention this is as, okay, one big trend in the market now, which is digital assets, which is based on a blockchain. The financial industry, especially in banking and payments, were very big quick to see where the trajectory is going, and they decided to adapt to it. Nowadays, Shiekh organization its own digital currency to be able to settle international payment between two countries. Visa, MasterCard, the giants, network payment now actually allow people in America and also in Asia to pay in, say across, the cryptocurrency or one of the cryptocurrencies. But you ask yourself, you see this big attacks and big churn in these financial sector, but you see something similar in insurance. Why is that? The reason, in my opinion, is that who has got the lever? The one that has the lever in banking and finance is us. What's important for me when I make a payment for myself, the good is that if I'm big less in this deals, this is the option that I go for. That's right. So this desire forces the big players to adapt to new technology. We have to believe. Okay, when it comes to the insurance industry, it's a different kind of fish. It's a different story. The one has got the lever, not the policyholder, not the insurance company, not the reinsurance company, it's the broker. Why? Because they got the data. That's true. The big brokers, the big guys, in the market, the one was got the data. The other mistake that was done in the market is that innovation and transformation is usually done by entrepreneurs and startups that present an idea, whether to a bank, to insurance companies that can use it in the system, and it becomes a big idea. The big mistake that entrepreneurs in the insurtech did when it comes to blockchain, they rolled out these leads and they said, oh, we're going to use this blockchain to disrupt the market. We're going to take it to giants. And they went all in for that with a theory. Only a theory. And some of the lead, actually, because of that, in the markets. And they created an unnecessary rivalry between the big names and big cats. And that's not going to work. You need to control it. So that was, in my opinion, one of the big reasons that you don't see that the production. The final thing, I'm gonna just stop my speech on business. Technology doesn't wait for you. Technology also, and it's up to you whether you stand still or forward. We don't need to go all in and don't need to stand. We don't need to adapt to it. All we need to do, in my opinion again, is just to consider and think out its potential. Is it gonna work for us or us? That's on its own will be enough. If you got ammunition to decide when to go in and when to spend money on resource. That's it. That's all I want to.
Thank you, Ali. Thank you.